Hello everybody, this is Toni Turner and welcome to the market now as of Friday, June 18th at about 1 p.m. Eastern. Well, the Dow opened down this morning, fell 1% at the open, and the S&P 500 and NASDAQ indexes are lower as well after the Federal Reserve official James Bullard said inflation was stronger than anticipated and it would take the central bank several meetings to figure out how to pare back stimulus. Indeed, the major indexes started falling earlier this week after the Fed unexpectedly signaled it could begin tapering its massive stimulus sooner than expected, sending the benchmark S&P 500 on course to snap a 3-week winning streak. And we kind of talked about that last week. So on that less than cheerful note, let's go on to 3 charts that could give us some insight into the week to come. Of course, as we always do, we're going to start our charts today with a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, I know this is kind of hard to see for some people, but the SPY was trading at $416.97, close to $41.69 for the S&P 500 itself. It is trading on fairly heightened volume today if we want to compare it to the days before in June. So it means a lot of traders are active, and again, it's trading right now at $416.97. That's important because, I know we're cutting it close here, but it's important because it has, at this moment anyway, fallen below the green line, the very, very important 50-day moving average, which is now coming in at $417.37. Now, we do remember that the SPY made an all-time closing high back here on June 10th at $423.61, and so we're now just about 2% below that all-time high. Now, if we back up and kind of look at this chart in a bigger picture here, get off the hard right edge and back up and look, we can see that last week we talked about how the S&P had, or the SPY had, lots of energy, certainly walking up its 50-day moving average for quite some time, starting last November, not even coming hardly close to it at all, dipping slightly at the end of January, dipping slightly again, and getting a little anxious there back toward the end of February, but it soon straightened up and started walking back up this 50-day moving average, which is considered to be kind of an intermediate term. In this case, it's a trend line as well, acting as a perfect trend line. So it's an important line that a lot of traders watch very closely. So we can see here in April how the SPY got very much more exuberant, trading at quite a high premium to its 50-day, and even at the red line, its simple 20-day moving average came moving sideways through the end of April, dropping down here in May, suddenly back down to its 50-day moving average. And then you can see the next move it had here in May, and of course we all know the old saying, leave in May and go away, but May wasn't so bad. But you can see here how the SPY had less energy in the second half of May and into June than it did in March and April. And look at the lack of energy here, like, wow, I've run for a long ways, I'm getting plumb tuckered out. And today it said, yep, I am tuckered out, especially with that news from Bullard that we just talked about. So now we have to see, can the SPY today, is it going to close above the 50-day moving average? I certainly hope so. That means it closes above $417.37. If it doesn't, then this 417 line could act as resistance in the coming week. Why do we care? We care where the SPY goes because 3 out of 5 stocks will follow it higher, and 4 out of 5 stocks will follow it lower. So this is kind of our, you could call it in a way, a crystal ball that kind of determines, has a very big influence on where the market in general goes. So that's why we as traders and certainly investors keep an eye on it. So we'll have to see in the coming week if the SPY can jump back up. Can it return some of its former energy, get back up here in the 420 area and higher, or does it need to take rest further and head down? We've got support here at 405. We've got support down here at 3, down here a little lower. Here's the 405 support. Then we have, of course, down a little lower to about 377, 378. Whoops, I should have put that a little lower. Up here to 389, 390. Then we've got 379 where the 200-day moving average is coming through. Hopefully we don't test those levels down that low. But if we do head lower, please double check your protective stops on long positions. You may even want to consider taking some profits if the SPY stays below the 50-day more than average for more than 3 days. Our next chart today is a chart of the QQQ. As you know, this is the Invesco QQQ that represents the all-important NASDAQ 100 index, very important index. Top holdings include all the big momentum stocks like Apple, Amazon, Alphabet, Facebook, that whole group. Now we can see that in contrast to the SPY, the Qs are doing pretty well today. Tech's doing pretty well. Today when I captured this chart, the SPY was trading at $343.25. It is above the 20-day, the red line, the 50-day, the green line moving, both of these moving averages. Again, trading at 243.25. Now, yesterday, Thursday, which would have been June 17th, it did close at a new all-time closing high at $345.34. Now, as we back up a little and look at this chart, the question is, are we setting up for a shallow double top here if the market starts, if the broader market starts lower? At some point, we think maybe, of course, the tech stocks will follow, but maybe not. So would it be a shallow double top? This would be the left. You could call it shoulder or point. This would be the right one. But that would only take place, only if the QQQ price came down and returned down to these lows here, right here, these April-May lows at $316. So we're quite a ways away from that yet. Otherwise, can the QQQ in the coming weeks stay above the 50-day moving average, which is coming in at $334.57? That's important. We can see that our trend lines here are forming a bit of a wedge. We know when this happens that price either at some point breaks out dramatically to the upside or to the downside. So we've got these trend lines here. We've got our trend line up here at coming in, this overhead trend line at 345. So that is forming resistance right now, potential resistance. And of course, the lower trend line coming in here about 325. So lots going on here. Lots going on. So we could have price break higher and continue the uptrend going into next week on the Qs, or maybe it needs to take a rest too. We'll have to hang on and see. Either way, it's going to be exciting. So please mind your stops and trade what you see, not what you think will happen. Our final chart today is the Globalx Fintech Etf, symbol FINX. It has 39 holdings in it. Top components for this ETF are Square, PayPal, Intuit, Adyen, Fiserv, all those big guys. Now, I was looking at this chart today, and it looks pretty positive considering what's going on. Of course, technology is doing pretty well, and fintech is kind of going along here on its own on its own motor or engine here. The Fintech, actually this is a fairly new ETF. It opened in September of 2016. It did make a new all-time high this year, February 16th at $52.87. After it made that high, it moved up at a pretty perpendicular angle to get that high. So as many times luck will have it, price moved down, matched that move only to the downside, then moved down to 42 in March, rallied back up to the 50 and 20-day, couldn't get over them, came back down, retested those lows toward the end of March. Then it rallied back up over the 20 and 50-day moving averages, back up into the 48, 49 area. Love to see here how price loves to retest where it's been. It moved up here, came back down, retested that prior point at 42, moved up, fell down, then retested it to the upside. So price likes to many times go where it's been before to see if it can move higher or lower at that point. At any rate, here toward the end of April, price moved back down on Fintech again, back down to down here to the lows to 40.50 in May, right down here, and then actually retested real quick, and then started moving back up here, moving back over the 200-day, the 20-day, the 50-day, and now forming a nice little uptrend here. We'll have to see how far it goes, but it looks like it's quietly moving on its own here to the upside. When I capture this chart today, the FinX, we'll call it, was trading at $47.28, again above its 50-day moving average, its 20-day moving average, and breaking out over this last trend line, this upper trend line that I was able to draw, breaking out over that right here in the past week and moving up. So it looks pretty positive here, but a lot, of course, is going to depend on the overall market in the coming week. So with that in mind, if in the coming week, if the FinX remains above the green line, the 50-day moving average, which is coming in at $45.51, if it can remain above that, and if the market behaves, and that's a big if, I will add a small position of the FinX to my trading portfolio. My initial stop's going to be down here below the 50 and 20-day moving averages. My initial stop's going to be at 44.50. Now, if the FinX rises above this prior high here, if it can rise up and above 49, the prior high was about 48.50, so I'm just saying 49. If you want to get in sooner, you can, but I want to see if it can poke its head above that and stay above that zone. I will add a small position to my trade, I will add a bit more to my position, and then of course by then my stop will be a trailing stop. So if the market does manage to sally forth in the coming week with any strength at all and is not completely negative, you may want to keep an eye on the FinX ETF. And now, before we go on to final thoughts, please know that if you'd like to become a more successful trader, if you'd like to be able to take advantage of these ETFs and certainly stocks, we haven't looked at stocks in this, but we've certainly looked at ETFs. If you'd like to become a more successful trader, this is a great time to check out my trader training programs. I think you're going to really enjoy my powerful strategies that are devoted to swing trading, trend trading, bottom fishing, and many, many more. My programs are easy to understand, and they can help you increase your gains quickly and easily. To see of all of my online training programs, simply click on the link on this screen right there, or you'll have to go to the link on this screen. You can't click on it, but you can click on the orange button below. And now let's look at some final thoughts for today. Question for the week this week is, would I hire myself to be my own money manager and hand over my accounts to me? And if I would, How am I currently measuring up? Am I treating my account in a responsible way? And am I, most importantly, protecting my capital at all times? Now, if you want, you can continue this game with more questions. Do I look at my statement at the end of the month and compare it to last month's statement? That's important. Do I make sure that when the market is in a downtrend, I stay defensive or neutral, and when it's trading in an uptrend, I take advantage of it? Now, be careful when you ask yourself these questions that you don't give yourself any accusatory answers like, yeah, right, I can't be any money manager, I do dopey things. Don't do that. No accusatory answers. Instead, use these questions as thought-provoking guidelines for improvement. How can you do better? How can you improve? Now, one way to start this process is to pretend, and I love this, pretend you are taking your trading account to a professional money manager, and that manager is you. Write down your goals for the account. This is important. What do you want the money to do? Make a down payment for a new home? Do you want to send a child to college? Are you doing this as a retirement account? Different goals have different strategies. If you want it for retirement and retirement is nearby, you're going to want to treat it much more conservatively than if you want it for a dream vacation 10 years from now. Get it? Then next decide, and this is tough for some people, decide the maximum drawdown allowable, and that means how much will you let your account percentage-wise fall before you say, okay, I gotta go to cash and refigure this out. I'm doing something wrong. What's the maximum drawdown allowable? 5%, 10%, 20%? What would it be so that if that account draws back to that percentage, it won't change your life in any way? Disappointment, yes, but it can't change the level of your lifestyle. So you're going to say if it reaches those numbers, a drawdown of 5%, 10%, you're going to want to consider taking it to cash and re-strategizing. So draw it down to this. What is your maximum risk for each trade? Now, standard in the industry, you don't want to lose on any one trade more than 2% of your entire account. That's standard in the industry. So some of these things you want to play with and see what's best for you. You can see by these questions what kind of topics you would address to a money manager. Now, though, ask those questions, discuss those topics with yourself, and make sure you treat your money with all this respect that you would demand of a good professional money manager trading your account. This is one productive way to trading success. Invest in yourself. Take some time to do this. So finally, please know that if you'd like to become a consistently winning trader, this is a great time to check out my trader training programs. To see all of my online training programs, simply go to the link on this screen or click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.